Hello everyone, welcome to another weekly outlook video. As usual, we are going to start with the dollar index. So I normally do this weekly outlook every Sunday. For those people who are new, welcome to the community. Please hit that subscribe button because we do this every single week. So now we are starting a new month. We have started a new month of April, and we're also starting a new quarter, the second quarter of the year. So you can clearly see if you look at the 3 months time frame, that's where we want to start our analysis from. And we do that because we are starting a new quarter. So it's good to see how the last quarter price closed and what we're likely to see. Now, if you look, you can see clearly we had all this drop last year. And then from there, we've been having all this correction move. So you can see we have this fair value gap here. So this is the 3 months fair value gap, and clearly you can see price has been retracing to this 3 months fair value gap. So of course, dollar on the macro higher time frame and everything is generally bearish. And we can see all this move that we've been having is just a correction or a retracement. So let's look at the monthly time frame. So if you look at the monthly time frame, again, it's clearly the same thing. We had all this liquidity sweep. And then we had all this bearish momentum, more of a consolidation here. And currently it looks like price is still in the correction phase. Now, if you look at the monthly time frame, you can see, of course, price has created a new dealing range. And if you're going to work with this new dealing range, you can see 50% or the premium of this new dealing range is right here. This is why we have 50%. And where we have the 50% of this new dealing range, we also have a monthly fair value gap. Remember, this is a 3 months fair value gap here. So I'm looking at high probability draw of liquidity for dollar. As you can see, we've already started seeing this bullish momentum, which to me, I look at it as a correction or as a retracement to an internal range liquidity before we see that bearish momentum. If dollar would still be bearish on the macro, because right now we are having all this bullish momentum that we see on the technical side of things. It's a correction or a retracement to the internal range liquidity. But if you look at the fundamental side of things, right now there's a lot of going on in the world with the Iran and US and oil prices. So because there's a lot of things going on in the world, so you find dollar will be considered a safe haven currency. So you find a lot of people are buying dollar right now. So for as long as the world is still scrambling for oil, dollar will still continue being bullish. And that is why at this point, it lines up so perfectly with here internal range liquidity. And of course, you can see we also have an inversion fair value gap at this point. So we have a fair value gap and we have an inversion fair value gap. So basically that's a balanced price range at this range. So this here is a high probability draw of liquidity, and that is what we are trying to position ourselves. So it means if we can be able to get a good entry, we can do a swing trade and position ourselves all the way to this monthly fair value gap that we have here. So let's look at the weekly time frame. If you look at the weekly time frame, of course, it's still lining up bullish. And if you look at the weekly time frame, you realize right now price has created a new dealing range. And you can see this is the new dealing range that we have. And so far, we've not had a retracement to this internal range liquidity here, this fair value gap. But if you look keenly, you realize that we have this order block here. An order block is still considered an internal range liquidity, okay? Which price has actually tagged it severally. We've tagged it like 2 weeks now, 1, 2, 3, even last week. So 3 weeks, this has been tagged by price severally. If you look at the daily time frame, you'll see this has been just consolidation. Of course, all this is consolidation because you can see all these candles are literally in the same region. So it's a consolidation between this high and this low here. Now, if you've been following me keenly, you know very well the past 2 weeks, either the other week, we were actually looking at this. I wanted to see price actually get to this internal range liquidity before we see that bullish momentum. But clearly, it looks like price is still dilly-dallying and holding on to these highs here. So now, simply because we want to see a retracement to a discount before we buy, it doesn't necessarily mean that price will always retrace to the 50% of its dealing range. At times, especially when price is really bullish, you can just have price forming a new dealing range, then you get a consolidation just at the top of that dealing range, then you get continuation momentum. So it's not a must that all the time after price creates a new dealing range, we are likely to see a retracement to a discount or 50% of the dealing range before we see the move. Although the best high probability moves would have been if price actually gives us this. If price gives us this, then this will give us the best high probability moves that we can actually comfortably hold it all the way to these highs here. But you see, we do not have control over price. We cannot predict exactly what price will do. We can only observe and react. Now, if you enjoy the way I do my analysis and you want to understand how to read price action from the higher time frame all the way to the lower time frame, to entries, targets, swing trades, intraday trades, weekly trades, you can join my trading community, and you can also join the bootcamp that I normally have every month. So the next bootcamp starts April 26th. So you can check the link in the description box below to sign up. So now let's look at the daily time frame. If you look at the daily time frame, of course, you can clearly see the consolidation that I've been talking about. Of course, all these on the weekly time frame, all this from this low to this high, it's just one dealing range. And right now we're in a position where we are looking at two things. Either we get retracement to here and then we get the bullish momentum, or after price created the dealing range, we are just getting the consolidation, then we get play B. Okay, so it's either we're going to get this play A or this play B. So when you get this play A, this is a high probability. I love this. These are normally the best kind of moves that we like to see. But you see, if we don't get this, we are likely to get this, and we cannot force price to do what we want it to do. Now, if you're not going to get this move, then I want to see more bullish momentum. So you can see this right here is an inversion fair value gap. So if you're still going to just see more bullish momentum from here, then it would be nice if price can use this to push price higher. And you can see we also have an order block here. So you can have all that bearish momentum, but this inversion fair value gap, if you're going to just see now bullish momentum from here, this can be nice if it's used to push price higher. However, if price wants to come for these lows here, then you will just see clearly price will invert this inversion fair value gap, creating a reclaimed fair value gap, and you're likely to see bearish momentum. And in that case, of course, you can see there's a lot of sell side liquidity here. All these sell side liquidity are good liquidity that price can actually go for, get here, so you can get more momentum now to get the bullish momentum. But generally, dollar, I'm bullish for dollar. So I want us to look at USDCHF. So USDCHF and dollar index are positively correlated. So if you really want to see a bullish dollar index, then you also want to see a bullish USDCHF. So if you look at the 3 months time frame, you can clearly see what you have right now. You can see we have this internal range liquidity. You can see price made a new lower low, creating a new dealing range. And if you're going to look at this new dealing range, you can see 50% of the range is where we have this internal range liquidity. Now, if you're going to see that bullish dollar, then my draw of liquidity for USDCHF would be this internal range liquidity. So let's look at the monthly time frame. If you look at the monthly time frame, of course, you can see last month really closed bullish, inversion fair value gap, and there's an order block here, which has already been tagged by price this April. So if you're anticipating a bullish April, then this is nice. We like to see open, form the low, which is the manipulation, before finally we see the expansion. That's how power of 3 works: open, manipulation, and then distribution. I teach again all this in the bootcamp that I normally have every month. Check the link in the description to join. So let's look at the weekly time frame. If you look at the weekly time frame is DCHF, we have this inversion fair value gap. So of course, you know, DXY is stronger than USDCHF. USDCHF is now trying to catch up. So finally, price created this inversion fair value gap the other week, and then you can see last week price has tagged that inversion fair value gap, which is literally an internal range liquidity of this move from this low to this high. So that's really nice. Now we want to see more bullish momentum. So you can see we're in a situation where now, after creating the inversion fair value gap, price tagged it, and then we want to see bullish momentum to this 3 months fair value gap. So if we look at the daily time frame, you can see more clearly it's really bullish, higher highs, higher lows, higher high, higher lows. Again, the same thing I'm watching. It just now depends with DXY. If we just get a bullish momentum for DXY without getting the deeper retracement, then of course you expect USDCHF to just also be bullish. So let us look at EURUSD. So if we look at EURUSD, of course EURUSD generally it's been bullish. And so far, EURUSD on the 3 month time frame, of course, you're starting with the 3 month time frame because you're starting a new quarter of the year. If you take your fib and measure from this low to this high, you can see this new dealing range that we have. 50% of the range is right here. And we have this 3 months fair value gap here. There we go. That's the 3 months fair value gap. And we also have an order block right here. And you can see this order block is actually at the 50% of this dealing range. So right now, our draw of liquidity for EURUSD is of course this 3 months fair value gap, but I'm specifically looking at this order block. It would be nice if you actually get that bearish momentum to this 3 months order block. So right now, this remains as my draw of liquidity for price. And then once price gets here, I'm anticipating we are likely now to see more bullish momentum, and that again will be another swing trade opportunity for EURUSD. So let's look at the monthly time frame, and I want you to see something. Again, the monthly time frame still the same thing. You can see we have a new dealing range from this low to this high. Again, 50% of the range is on the monthly order block, which is also in line with the monthly fair value gap. Now, another thing, if you look at the monthly time frame here, you realize we have a fair value gap here. So this is a fair value gap for EURUSD. The same way we also have a fair value gap for DXY, but on the opposite side, which is bullish. Remember, EURUSD and DXY are negatively correlated. So this 3 months order block, of course, is my draw of liquidity for price. And it would be nice if we're getting that bearish momentum, if we actually come all the way and get to this fair value gap. So which means this sell side liquidity here is our draw of liquidity for price. So let's look at the weekly time frame. If you look at the weekly time frame, you can see clearly our draw of liquidity is literally providing a swing trade. Let's see how many pips are these from where price is currently. That's 377 pips to this fair value gap. That's 442 pips. So roughly 400 pips, 350, 400 pips. That's what we have for price to get to our draw of liquidity for EURUSD. So right now where price is, of course, on the weekly time frame again, once we had this bearish momentum and price made a lower low, what did we do? Price created a new dealing range. So again, if you look at this dealing range, you can see 50% of this dealing range is where we have this fair value gap here. And if you've been keen with the weekly outlook that I've been doing, this has been my draw of liquidity, especially for these weeks that we've been having this bullish momentum. So I wanted to see actually price get here before we see that bearish momentum. But clearly you can see again, it's literally the same as DXY. After price made a new lower low to create a new dealing range, instead of price retracing to this internal range liquidity, so far what we've had is just a consolidation. Now, and I told you, it's not a must for price to get to the internal range liquidity of the dealing range or 50%. You can just have consolidation and then price gives you and we get a continuation move. And right now you can see we have this volume imbalance here, which price is actually tagged this severally. So this can still act as our internal range liquidity that will be used to push price lower, and we fail to get that deeper retracement to the 50% of the range where we have this fair value gap here. So if price does not get here, it's still okay. We cannot force price to do what we want. Again, another thing, you might find price is still not ready yet to move. We can still have more consolidation because you can see it's just been consolidating for the past 2 weeks. So I won't be surprised again if this week we get another consolidation. So I'm looking out for all that this week. So let's look at the daily time frame. You can clearly see on the daily time frame, yeah, the consolidation that I was talking about. We wanted to see price get here, but you can see looks like price is not ready to do that. So we're not going to force price. However, I want you to remember that we have very beautiful buy side liquidity here. So if price will want to still give us that retracement to here, it will really get very beautiful liquidity here before it gives us that. But if it's not ready to do that, that's okay. I'll be watching this daily order block here. I don't want to see price violate this if you're going now to see that bearish momentum from here. So price should not invert this. The moment price inverts this, then at that point, there's a high probability that price will be, if we get this, then there's a high probability price is coming here price is coming to that internal range liquidity that we wanted to see on the weekly time frame, and then from there we are likely to see that bearish momentum. However, if we don't get that and actually price uses this order block to push price lower, that's still a play. Okay, so that's what I see for Euro USD. It's still the same thing with DXY, but now on the opposite side for DXY. So let's look at GBPUSD. So GBPUSD and EURUSD are positively correlated. So we want to see the same kind of price action from it. Now, if you look at the monthly time frame that we're going to start for GBPUSD, you realize price actually inverted this fair value gap here. And once we get an inversion of this fair value gap, do you see how the new month, April, and April, we're anticipating a bearish April. So power of 3, you can see we've had open, form the high. So all this is just manipulation after open. After we have an open, so we form the high, tagging the inversion fair value gap distribution. So the big question is price ready for distribution, and is this going to be the high of this month? If that is the case, then of course we anticipate just bearish momentum, and we'll be looking at this as a draw of liquidity for price. So if we look at the weekly time frame, again the same thing, new dealing range formed, and then we had all this movement higher. So is this a retracement to this internal range liquidity? Because you can see this is a volume imbalance here. So price has actually tagged it severally. After we formed this lower low, you can see price has tagged it twice now. So, and so far we've had this bearish momentum after price tagged this monthly inversion fair value gap. Now on the weekly time frame, now we have an order block formed here. So it will be nice if we see open high, then we have that distribution lower. So let's look at the daily time frame. If you look at the daily time frame, you realize that for GBP USD, price has not yet violated this order block. This order block here is all holding price lower. And also there's this fair value gap here, which also has not been violated. If you look at it keenly, you realize that all the candles are closing inside this fair value gap here. So this is a good thing. This shows that there's a high probability that this market is now going lower. But now, again, it also depends with what we see for DXY. So let us look at gold. So if you look at the 3 month time frame, we can clearly see that this is how the last quarter closed, and you can see now we're starting a new quarter. And so far, after the last quarter close, you can see price left behind a fair value gap. Now, gold is a different animal. I'm not going to really sit here and tell you that I want to see gold give us a retracement to this fair value gap before we continue going bullish. I'm not going to do that. So for gold, we're just going to work with it as it is, okay? Whatever price action we see for gold, we're just going to work with that, because generally for gold we are bullish. So if we look at the monthly time frame, so just working with what we see right now, market structure, you can see so far we have an order block that was formed here, and of course we had all this bearish momentum. Now if this market is going to be bearish, it would be nice if we can get that before we see that bearish momentum. That's one. Or we just see where it is right now, we can just get a bearish momentum from here, or we now see a bullish move. That is also a play. Let's go look at the lower time frame and see what exactly we're likely to see. So let's look at the weekly time frame. If you look at the weekly time frame, this was our analysis for last week. We wanted to see price tag this, then now which price did that? You can see last week, this week that just ended, that's exactly what happened. Price has tagged this fair value gap. Now if gold is still bearish, then this is a good place that we're likely to see that bearish momentum from. It can be even better if we get more bullish moves for price to even tag the order block before we see that bearish momentum. So I see that as one way. If gold is bullish, then of course finally we'll just see, we're going to see bullish momentum until finally gold inverts this bearish fair value gap, and then from there of course now you can expect a bullish momentum. So let's look at the daily time frame. If we look at the daily time frame, you can see again there's this daily fair value gap, which also we had identified, which is inside the weekly fair value gap too. So if you're going to get a bearish gold, yes, it can be nice if this is used to push price lower. It's still inside the weekly fair value gap, remember. However, if gold is going for these highs here, do you see how price actually respected this fair value gap here? So this fair value gap can be used to push price higher. So we get to this fair value gap and tag the order block there. By the time you're getting gold is inverting this fair value gap here, then that is a good confirmation of now that bearish momentum for gold. That's literally the play I see for gold. So let's look at NAS 100. So far we're going to start with the 3 months time frame, and you can see this is what we have. Price tagged at 3 months fair value gap, the first quarter. That's exactly what we have. And so far this is what we have. Of course, if you're going to do your dealing range, you realize this is let's see, so 50% of the range is there if we use that wick. If we use this body, 50% is around here. So I just want you to know, if you're going to see more bearish move, we have this order block right here. And most of the time, whenever a dollar is bullish, you're likely to see a bearish indices. So yeah, and so far we're expecting more bullish dollar, so which means we are likely to see more bearish indices. So if we look at the monthly time frame, let's look at the new dealing range. We can look from this low to this high. So 50% is here, and also you can see we have a fair value gap here on the monthly time frame. So if you're going to see more bearish momentum, then yeah, our draw of liquidity would be this monthly fair value gap. So I'm watching this. So let's look at the weekly time frame. If you look at the weekly time frame, of course, you can see we've had all this bearish momentum, but I'm sure you've noticed NAS has been weaking. We've been having a lot of weaking. That's the kind of price action we've had for a very, very long time now. And last week we had this bullish momentum. So I'm looking at this as a retracement, and you can see we have this here. So price tagged this, and what else do we have? It okay, we just have more gaps. That's all we have, more volume imbalance. That's all we have from there. Now if you're going to get more bearish NAS 100, yes, then this can be nice. You can see we've had a retracement here, and then we get that bearish momentum, or maybe we might have a more retracement to here before we see that bearish momentum. So we're just going to see how price reacts from this level here. So let's look at the daily time frame, and if you look at the daily time frame, you can see all that bullish momentum. That's what we have. So I'm watching. You can see here we have an order block, and we also have a fair value gap here. Okay, so if you're going to see that bearish momentum for NAS 100, then it would be nice if it uses this to push price lower. If we invert this, then there's a high probability we're likely to see more retracement, because right now we can just see, if you look at it on the weekly time frame, NAS 100 is in more of a correction of the move. Because if you look at the weekly, you can see we had a bearish momentum forming a new weekly dealing range. So all this bullish momentum I'm looking at on the NAS 100 is just a retracement or a correction move. So that's what I see for NAS 100. Okay, so that is all I prepared for this weekly outlook video. If you enjoyed this video, please don't forget to give it a thumbs up. If you have not subscribed to this channel, hit that subscribe button. I'll see you in the next one.